Welcome back, everyone. And this time we are joined by the co-founders of Atrium Research, Ben and Nicholas here. So Ben brings sort of the more engineering perspective to Atrium Research, while Nicholas is sort of the more CFA level. And what Atrium Research is essentially about is really it's a platform that carries quite a bit of institutional weight for in regards to sponsored research, but also outside of that. And they're also always available for, recently there was this defense virtual conference with geo investing, right, where Nicholas participated. So very active within the microcap scene and sort of sub 500 million space. So yeah, it's nice to have you on here, guys. And can you perhaps talk a little bit about yourself, introduce some other details that I haven't mentioned, and yeah.
Sure. Thanks for having us. I'll maybe start and give some background on myself, and then
Yeah.
I'll tell you a bit about Atrium as well, and then Benny can do the same. So maybe depending how far you want me to go back, but I think I started getting interested in investing back in university. Doing some stock pitch competitions, joining some investment clubs, just dipping my toe in the space, and kind of got the passion for it through that, and started investing my own money. And I knew that this is something I wanted to do. I had a really good time researching these companies, making good money investing in them, and I ended up joining a sell side firm after graduating university
Mm-hmm.
as a research associate. I did that for a few years, ended up getting promoted to analyst, covered a lot of different great companies in different industries. Ended up getting my CFA while I was there as well. And yeah, just always been involved with the small cap and micro cap scene, and seeing the opportunities that you can find in the mispricings there was always something that I really drew me into this type of
Yeah.
investing. So, um, and then about 3.5 years ago, Ben and I got the idea to start Atrium. Um, and the philosophy behind that was that there was just a declining amount of sell side coverage out there
Mm-hmm.
for some of these microcaps. And a lot of the best companies out there don't have sell side coverage because they're not raising money. So there's no way for these banks to extract value out of them. So we thought that the sponsored model was kind of where the puck was going to go over the next few years.
Mm-hmm.
So that was the genesis behind it. So we started the company about 3.5 years ago. We cover over 40 names today across various industries, various market caps.
Yeah.
And really, the core of Atrium is to use research as a marketing tool for these companies, and write high quality research, display the investment thesis on the companies, and then get that out to a wide
Yeah.
audience, on social media, on our email list, our website, and so on. So it's a tool for investors because you can get high quality insights, estimates, projections, and so on, but also for the corporates. They can get that research out to a wider audience
Awareness. Yeah.
and increase the awareness.
Yeah. And
Yeah, and then
yeah.
I'll
I
jump
just
in
wanted
here.
to say,
So,
yeah. For you, Ben.
for sure. Thanks, Lucas, and thanks for putting this together. So my background stems from mining engineering. So I was in the mining industry, graduated from Queen's University, which has a pretty great program, and then started working for Barrick Gold, which up until recently was one of the leading Canadian miners, and cut my teeth in the mining industry there. It was a great experience, but ultimately needed to get back to Toronto, get back home,
Mm-hmm.
and got into equity research. That's where I met Nick at this previous sell side shop. So I was hired into the analyst role there, writing research on exploration companies, development, and all the way up to some of the larger producers out there. Great sort of breadth of experience doing that. And that is where the origination of the Atrium idea came, alongside sitting beside
Mm-hmm.
Nick at our desks. But even prior to that, I of course had interest in investing, looking to put my money places where it can grow. And
Of
I
course. Yeah.
I did lose some money investing in some maybe not so good companies
Who
when I was
doesn't have
younger,
that? Yeah.
and I was naive, but ultimately I thought, become an expert in the industry that which is mining. And so
Mm-hmm.
over the last 5-6 years and the last few with Atrium, I believe I've been able to do that pretty well. And it goes with getting into the nitty gritty and the research that we write on our clients, learning, the fundamental story behind the name, and ultimately deriving an investment thesis. So, yeah, 3.5 years with Atrium and Nick, and we have a team of 6 now. So it's been great to get where we are today, and we're going to continue to grow and continue to shine a light on some of these smaller cap companies that either don't have coverage or are looking to get more market awareness and get that research into the hands of investors that otherwise don't have accounts with those brokers that
Yeah.
cover some of the names that we work with.
Yeah.
So that's me in a nutshell there, Lucas.
Yeah. And, to sort of come back a little bit about Atrium. So Atrium has really managed to carve out a great reputation in regard to company sponsored research in the, micro cap, small cap space, right? And how do you guys balance sort of the relationship between the clients while at the same time also holding that the buy ratings carry actual weights towards institutionals that are oftentimes pretty skeptical about company sponsored work, right?
Mm-hmm. Yeah, I'll take this one, Nick. So um, that is correct. We serve two sides of the industry, right? We serve the client that we write research on, but we're also serving the investors that read our research, and we want to make sure that we're providing not only good, thorough research reports, but good investment ideas. And so that goes with doing a little due diligence on the clients that are looking to work with us, or we're looking to work with them. And that goes as far as making sure we believe that they're a good investment, right? Of course. And
Of course, yeah.
I think we have a pretty solid track record of doing that over the last 3.5 years. Of course, there's going to be a couple losers in there, but broadly speaking, we've worked with some very high quality companies. We still do, and if anything, now that the business is larger and we have more of a reputation behind us, we're able to be even more selective with the clients that
Of
we
course,
work
yeah.
with. And there's a process into that due diligence, which I think we'll get into in a moment. But generally speaking, we want to make sure we're, of course, providing a high quality service and research report for our clients. But we need to make sure that the followers trust our research, and that goes with doing legitimate fundamental analysis on these companies.
Yeah.
And one thing I wanted to add there was just it's good to remember that all research is paid for one way or another. Everybody's bias, whether it's the sell side or us, the sell side being they're trying to pump up the price so they can do another private placement at a better valuation. They have broker warrants in some of these companies, so they're participating in the upside. So, all research has their biases, they have their ulterior motives. And even if you're just reading somebody's Substack, they obviously own a position in the name
Yeah, of
and they're
course,
trying
yeah.
to drive the price higher, right? So there's no such thing as truly independent research. Everybody has some type of motive. And I think the way that we do it is pretty clean, given that we don't own these stocks. We're getting paid in cash, and we're trying to work with these companies over the long term. And we don't really do much business of companies coming to us and saying,
Yeah.
"Hey, cover us." It's really mostly us finding companies that we want to work with, whether that's through our PAs or through screens, reaching out to them directly, or even getting referrals through people on the buy side, so portfolio managers, people in the small cap scene that have been on your show before that refer names over to us, so they've been vetted in a sense. So it's very little of these scummy companies coming to us saying, "Hey, pump our stock up."
Yeah. And you already sort of talked about the screening process and looking at these overlooked companies, right? So how do you sort of find out or rather decipher wherever a company from your guys' point of view deserves the spotlight, right?
Nick, you
Yeah, I
want to take
think
that?
it's case by case basis.
Mm-hmm.
You have to look at each company on an individual level and see that what's the thesis behind them, what's the valuation the stock's trading at, the management team, and so on, and take that holistic view on the company. So I wouldn't say there's a necessarily a formula, but it's doing a lot of that traditional fundamental analysis. And if they make a good enough company that I'd want to invest in them personally, then they'd probably make a good client for
I
Atrium
mean,
as well.
perhaps we can sort of talk about a case study, right? One such example could be, for example, Dynacor, right? So, what made it for you guys that Dynacor was, from your guys' perspective, deserved that spotlight?
Yeah.
Yeah.
I think Dynacor is actually a really good case study when we started to get involved with them because the company had a long-term track record. They grew revenue and cash flow at a 10% CAGR over a decade plus, profitable for over a decade.
Mm-hmm.
Increased the dividend at a 20% rate, and they had no analyst coverage. So they popped up in our screens. We thought it was interesting. And that was because they didn't raise any money. They did this all through cash flow. And that's kind of the perfect case for us, where this company doesn't need to tap the street. There's no way for them to generate fees for these banks. But they probably deserve coverage because
Mm-hmm.
it's a fundamentally good business and the company is generating cash flow. That story has changed a little bit because they've raised some money. They've got some more coverage via
Oh, yeah.
that. Um, but I'd say when we started to get involved with them, that was kind of the sweet spot for us.
Mm-hmm.
Yeah, well, and maybe just to add to that, track record is a big thing for companies that have a long track record, and Dynacor isn't anywhere close to that line of do we cover them or not. They were one of the best performing, mining companies out there up until this most recent, sort of boom in the mining market and
Yeah.
dividend paying, cash flowing. That's checking a lot of boxes, especially in the mining industry, where for the more broad market, they're not making money until they start producing, and many of
Mm-hmm.
them struggle even when they do start producing. So Dynacor, great sort of case study for us, and that goes with when we were building out the brand and the reputation. Working with clients like that have definitely helped us get to where we are today.
Mm-hmm. So I take it that track record and essentially the fundamental sides, all of that is a combination, and then ultimately decides how it ranks for you guys. And at the end of the day, if it works out, you guys work with them together, and it becomes sort of sponsored research,
Yeah.
right? Yeah.
Well, and one other thing I'll add, and it's probably more important on the mining side than the diversified, but is the management team.
Yeah.
And that's because, and I believe this to this day, that a great manager or great management team can make a mediocre asset work, but a poor management team, even with the best asset in the world, it's not going to work out. And so that goes with that sort of introductory call that we have with them, just
Mm-hmm.
asking them some questions. How do they talk about the story? How much do they know about it? What's their plan going forward, et cetera, et cetera. You can get a lot out of that pretty quickly. And a strong management team will have better access to capital, better relationships, all of these different levers that allow the company to continue to advance.
Mm-hmm.
So that's a big piece of it as well.
Mm-hmm. And sort of looking at these reports, so what are some of the, let's say, the three non-negotiables that an Atrium report has to have to meet sort of your guys' standard, your guys' quality of the research you put out?
Yeah, that's a good question. So the way our sort of product works, again, similar to the sell side, it starts with an initiation report. So deep dive into the company, and then follow on reports throughout the year, keeping investors up to date as the company executes. But I think by and large, the initiation report, the big deep dive, needs to have, of course, a company overview. So
Mm-hmm.
detailed breakdown of what the company does, their operations, what it looks like, depending on the industry sector and the business model. But very importantly, a valuation section and everything that comes with deriving a target price and a rating. And that goes with having a peer group analysis. So if you can find a good group of comparisons in that specific industry or market for the client in particular, so that there's some benchmarking there. And then, of course, using the right valuation methodology to
Mm-hmm.
derive that target price. So those are two major parts. And then we're trying to synthesize that entire company overview into a handful of investment thesis criteria, right? So let's say strong management team, trading below the peers, good momentum in the industry, a handful of these key sort of investment criteria. That's what we really try to emphasize so that it can be a one-stop shop for an investor to completely get up to speed on that given story. Nick, I don't know if you have anything to add to that.
No, that was good.
And what I'd also like to highlight from my perspective is the sort of pretty long-term approach to it, right? You guys look at 3 to 5 years instead of something that is an idea for, let's say, oh, well, this XYZ company is perfect for this year, whatever it might be, right? So it's very a long-term look at those companies. And I also wanted to sort of pick your guys' brain on this current sort of environment for the markets, right? I mean, you guys are of course bottom up approach, right? And also with some top down investing, right? When you take a look at the commodities part. So how do you see this sort of current market environment we're in for small caps, right? We are sort of seeing some liquidity dry up. So how do you guys personally navigate this current environment?
Yeah, I mean, it is a tough market. Liquidity has, dried up significantly over the last 5 years, seeing less, IPOs and new listings every year. And a lot of companies are getting taken private, right? So
Yeah.
there's just a smaller pool for companies for us to fish in. Regarding navigating it, I think, the best thing to do is just turn over a lot of different rocks. Being on Twitter, X, co.ca, all these different places, you can synthesize a lot of different ideas and take a quick look at them. And if they meet some of those criteria, you can go deeper. So I think, given the quality and the valuation of a lot of these names, just take a look at a lot of different companies, and some will meet your criteria, some won't. And then, yeah, I think there's some themes that have worked. You mentioned we've been pretty early on the defense theme over the last couple of years. We've done a lot of stuff in infrastructure, obviously the mining side, specifically with gold and silver. So yeah, there's different themes I think that the market has taken attention to. So that top-down approach does actually work pretty well in the current regime. But yeah, I think those are the two standouts. I'd say turn over a lot of rocks, and then you can do some top-down, and if you can identify some good themes that will do well over the next few years.
And when you guys, oh yeah, you can.
Sorry, I was
just go ahead, Ben.
Yeah, I was just going to jump in there, and this sort of goes back to your previous comment about our longer term thesis, 3 to 5 years, and that aligns with what Nick just mentioned, right? In terms of trying to find a company that's going to do well over the long term. That goes with our research and our product, right? We're not trying to pump up a stock on the day that we put out an initiation report. These are deep, lengthy pieces where ultimately we're trying to attract the investor that's going to read the initiation, take a look, throw the company on their watch list if they like it, keep an eye on it, follow our update notes throughout the next couple months, where ultimately if they do decide to invest in the company, that they're investing in it for the right reasons, not just a catalyst is coming in the next week, the stock's going to do well. It's they're getting behind the story for the next 2-3 years to have that full thesis play out. So that does sort of align with what Nick mentioned, is if you can find a theme, an industry, a company that is lower risk to fulfill their targets and their goals over the next couple years from a 2 to 3 to 5 year perspective, then ultimately it's going to be a big winner over time. And you just got to be patient, right? We're not trying to attract the people that are buying on a headline.
Yeah, of course. And when you take this long-term approach, this is when management becomes a really important factor, right? You guys mentioned the track record, but when you take a closer look at management, like what are some of the things you're checking out, some of the things that to essentially verify that, okay, well, it's not also that it seems like, at least on paper, that it's good, but also that you guys can stand behind it. That's or
Nick, you want to take that?
Yeah, sure. Well, I think you get a lot of that sense just from speaking to management. Hearing their tone, the way they talk about the company, how they feel about shareholders. Are they constantly diluting themselves? Issuing new stock, issuing options, and just how they speak about the story. I think you can tell a lot about how they feel about a company. Obviously, you want the incentives to be aligned. They own a good percentage of the company. And then the track record. What have they done in the past? Have they been successful? Have they come from a larger company down to the microcap scene?
Mm-hmm.
Have they had successful exits in the past? So those are some of the things we look at. Um, Anything you'd add there, Ben?
No, I mean, common sense as well, right? Getting behind a thesis, talking about the story, even how they can pitch the story,
Mm-hmm.
right?
Yeah.
They can give you a 1 minute pitch, if they can give you a 5 minute pitch, if they can give you a 20-minute pitch and have it all synthesized well, that checks a lot of boxes because you know that they're executing that same pitch to investors, right? They're trying to attract people to the name, whether it's raising money or
Mm-hmm.
investing in, just day-to-day trading. Those are all items as a public company they need to push the business forward. And again, we're mostly working with public companies, so that is an important factor. But no, I think Nick hit the nail on the head on the majority of that. And one that I like to emphasize is ownership in the company.
Mm-hmm.
If
Skin in the game.
they're telling me, if they're telling me to invest in the name, they should be invested as well. And that's a good sort of breath check that their motivation is in the right place and not just on a salary.
Mm-hmm. Mm-hmm. And sort of, you guys have you cover about 40 companies, right, as you mentioned, and some of these, right, we already talked about. One is Dynacor, right, but also one of the others that are pretty known is for example, your guys' coverage on ADF Group, right? So what is, just to sort of give a short introduction on that, and then I'll introduce a sort of a more specific question on that. So
Yeah, sure. So we started covering ADF pretty early on. I want to say it was 2023. I think it was around $4, $5. And, it was another one of those perfect scenarios where
yeah.
the company's growing, they're generating cash, they don't need to dilute shareholders, they don't need to do anything with the banks, so there's no reason for them to have any sell side coverage. So that was where we, thought it would be a great initiative for us to get involved. And the company did execute over that time. It went from, $3 to $21 at its high. And they got swallowed up in the tariffs.
Mm-hmm.
The business pulled back a bit. They've done a good acquisition, I think, in our opinion, over the last couple months, and I think they're back on that growth trajectory going into this year. So it's a name that we really like. Still, it's very cheap on a cash flow basis, on an EBITDA basis. And there's a lot of tailwinds in their markets, in infrastructure and hydroelectricity and so on. So another textbook case for us, and it's a name that we think will do well over the long term.
Mm-hmm. And with, you already sort of talked about it, right? The acquisition of LAR Group, right? And how do you see sort of the integration risk with that? Because they're adding quite a sizable portion to their business, right? And also a big part of their backlog. So how do you guys perceive that sort of acquisition?
Yeah, well, I think it's a perfect acquisition for them to really expand into a new market, a new subset of the market that they weren't tapping into before. Regarding integration, they're buying a distressed company, right? So it's
Mm-hmm.
not something that's going to be just tomorrow, snap of the fingers. It's gonna be massively accretive, right? So the thing to watch, I think, is the margins, as well as the backlog, right? So I think they're still chewing through some of those old contracts, those lower margin
Mm-hmm.
contracts that got them into trouble originally. But as those go through the system, they're able to sign on new contracts with Hydro Quebec and all the hydro authorities across Canada. We'll hopefully see those margins start to rise, and the acquisition will prove fruitful.
Mm-hmm. Mm-hmm. And in sort of this current microcap scene, so how do you see sort of when you analyze companies, you start the pre-screening, you start the screening session, right? So when you look at some of the, right, the financial statements, like what are some of the things you look in particularly out for? Like what are some of the, let's call them, you're right, those green flags, red flags, right? So what are some of the perhaps things that you take most notice of, and maybe even get a little bit sort of and are not being enough sort of looked at by, let's say, the retail guys out there?
Yeah. Well, I think the kind of the bare minimum is to have a decent balance sheet, decent cash position, not too much debt, as well be profitable or close to profitability or on the right path. So those are kind of table stakes for us. On the explorer side, on Ben's side, it's a bit different, but
Hmm.
on my side, those are kind of the two first check marks that I'm looking at. And then we're going to get into things like revenue growth, margin expansion, kind of those traditional fundamental things that you want to look at. Um, so yeah, I think it's a pretty traditional fundamental approach that
Hmm.
most people would be familiar with.
Hmm.
Ben, you
Hmm.
want to talk a bit about the mining side?
Yeah, and thank you. And obviously, mining is very different.
Yeah.
The producers, of course, you're looking at more the financials, like on Nick's side, where they have a product, they're selling it, and they have costs to get that product out of the ground, for example. But looking at the explorers and the developers, access to capital is a huge um, you know roadblock for these companies in order to continue advancing and getting their projects developed. And so with the explorers, of course, um, they need money to drill, and them essentially accessing that capital from the market is a key growth um, initiative that they need to access in order to advance these projects. So with any company, explorer, developer, we're looking at what is their cash balance
Yeah.
today, how long of a run rate do they have, but have they been able to successfully access capital in the past? What is their burn rate looking like? And of course, the momentum of the company. If the stock is doing well, they've
Yeah.
been able to raise money at higher values, month over month or quarter over quarter.
Hmm.
Um, that's of course an important aspect. And then, lastly, tailwinds in the industry, right? That's
Yeah.
that's a big thing, and we've been very fortunate over the last couple of years to be riding this wave. But each of our clients, is raising more money. They're able to do more with that money, continue to advance these projects. Um, but then again, it goes back to management. And I
Hmm.
think access to capital really comes from a strong management team. They're able to pitch the story, they've got good relationships, and all of that sort of combines to be able to accelerate these companies and continue to advance them. But
Hmm.
obviously, a whole bunch of intricacies we don't need to get into with
Yeah.
specific assets and jurisdictions and things like
Yeah.
that. But again, a strong management team typically will be able to access capital.
Hmm. So your sort of way of looking at it is first management, then I assume comes sort of the financial position, and then the asset, or how would you sort of view it from your perspective?
Yeah, I mean, financial position, it's quite a simplistic story for these exploration companies. They pretty much lose money as they develop
Yeah, of course. Yeah.
year over year. And management, I think, is the most important role for an exploration or development company. And as they grow, as they pivot to the PEAs, the pre-feasibility studies, the feasibility studies, of course, the asset really starts to matter more.
Hmm.
Now, I'm not saying the asset doesn't matter, but um, if an asset doesn't work out for a smaller exploration company, a strong management team will be able to be acquisitive, find another one, and start diverting attention to this new asset. Whereas a poor management team wouldn't have that
Hmm.
capability per se. So, um, correct. I would say management, next asset, and of course, a great management team and a
Yeah.
great asset. You're gonna make a lot of money.
Hmm.
Um, and maybe I'll just touch on, for the listeners that maybe don't know and are looking to get into the mining industry because of what we've seen in the space over the last
Yeah, the
couple of
current
years, and the
tailwinds.
momentum is just exploration companies are the smallest, highest risk, but of course, highest reward. And then the development companies, this is when they've found material in the ground. They're now going to put together economic studies to see if it's possible to build a mine out of that. So there's the PEA
Hmm.
stage, feasibility, and then they go into construction or permitting first. And then, of course, the producers, they're actually, digging rock out of the ground, processing it to get gold or whatever metal it is that they're mining, and ultimately selling that for revenue
Hmm.
and ideally profiting and going from there. So those are sort of the three stages, and you can see that on our website. We've got a almost even split between explorers, developers, and producers in terms of our coverage. And lastly, we do have royalty companies, which is
Yeah.
quite a
And a
interesting
monthly
industry.
report as well. Yeah.
Yeah, so that's a neat industry, is the mining royalty companies, and we've got a couple solid clients there in Sailfish Royalties and Ecora, who we recently launched on. So if investors are looking to dip their feet into the space without actually maybe knowing what a good or not so good asset is, a royalty company can be a great way to get into the space, but diversify your investment across
Mhm.
multiple assets.
And also perhaps Dynacor deserves a mention because it's a processing only model, right? They are
For
a
sure.
little bit different than purely a mining story, right? So
Absolutely.
yeah, and I wanted to sort of touch on, you mentioned the tailwinds of the last, call them 2 years, 1.5 years, right, for these commodities. So how do you see this currently? And I also assume that how management has navigated in the past when capital wasn't so readily available also played a huge role
Mhm.
into your analysis for explorers.
Absolutely. Well, so let's say pre this recent bull market that we've been in, it was quite a dark time.
Yeah.
I was an analyst at this previous shop between 2020 and 2022, and um, these companies were really struggling to raise money. Um, but what was important is that the management team was getting creative, finding different ways to access capital,
Mhm.
continuing to advance the project so that investors knew what they were doing, they knew the story, and so when that market did turn, those are the first companies to rise and do really well. Um, in terms of this market right now, yes, gold, silver, copper, most metals have done very well over the last year and a half. I'm not an expert economist, but I think just looking at it from a bird's eye view, I don't think this is done. These mines, and in order to bring new supply online, it can take multiple years, if not decades, in copper's case. And I think that the supply demand dynamics have not changed much in the last year and a half. And so that is supportive.
Sorry to intervene, but I think just for the listeners out there, in regards to supply and demand, I assume you are talking about the equities out there, right? That exists, and new IPOs coming in, or companies going out, or did you sort of mean a different angle to it?
I mean, with the metals in particular.
Hmm.
So the demand of people, wanting to buy precious metals because of all the money
Oh,
printing
yeah.
over the last handful of years, and then the supply coming
Hmm.
online with
Yeah.
new mines bringing in more supply. It's not tech. You can't just bring on supply like that. And so I think
Hmm.
this will be a longer bull cycle than this slight market correction that we've seen since the Iran war has taken place. And specifically copper, right? These mines take 8, 10, 15 years to go through permitting and build a large enough mine to actually affect the supply demand curve. And so ultimately, I think, bird's eye view, this bull market's going to be around for quite some time.
Hmm.
Different metals will have different cycles and time frames, but nonetheless, I'm quite bullish over the next two,
Yeah.
3 years.
Hmm. And just also to get another perspective, I assume when you looked out at those explorers, developers, and also mining companies, I mean, sure, there has been a great performance on a lot of these, right? An amazing performance, but would you, at least from your experience, say that there has been some sort of irrational exuberance to an extent, or would you say that this has still been under, let's say, a more controlled rally, so to speak?
Yeah, I mean, you could argue some have, been overbought. But when you're looking at historical sort of norms in terms of where some of these companies have traded in the past and previous cycles, I don't think anything really has gotten too far overblown. If you're looking at
Hmm.
producers where there's sort of more data in terms of EBITDA multiples and things like that, um, we're looking at $4,500 to $5,000 gold. Their margins are very high at these prices. I don't think that things have gotten overblown.
Hmm.
And in addition, I think that there is some tailwinds from the generalist investor getting involved. I think some have over the last year, but when you see how the S&P 500 has performed over the last 5 years, how these tech companies have performed over the last 10 years, it takes a while to get people to come over to the mining industry. And it's going to take several quarters of the metals and mining industries and equities outperforming their portfolio and tech or whatever it may be before they say, okay, I need to get involved, otherwise I'm going to miss out on this. And so I think we've seen some of that. Maybe this correction has slowed that progression over the last month, but ultimately I think that's where you'll start to see multiples get beyond maybe where they should be. But I don't think we're there yet.
Mm-hmm. And as the past few months, past few quarters, we could really notice that institutional capital has started to move downstream, not only within the commodity sector, right, but also outside of it. So as you do the screening process, do you find yourself that at least in this current market, you might have to turn over a few more rocks, or that you might have to look at a lower market cap than you otherwise would be in a market that, let's say, isn't as favorable as it is still currently? I mean, sure, there has been a little bit of a liquidity drain, but it's still largely still pretty favorable.
Yeah, I think in the mining industry in particular, there's so many companies out there that I don't think Nick and I have any issue finding decent ones to work with. And yes, we are seeing some of that institutional money come downstream a little bit more. The financings are becoming, $10, $20 million bought deals for $40 million companies, things like that. But what is important in that is, like I said, access to capital. And so I would rather invest in a company today that just raised $10 million. I think that their probability of getting to the next level is that much higher than one that might be a little bit smaller market cap, so technically more upside, but only has $1 million in the bank. Getting that financing in is de-risking the story for them to advance the project over the next year and a half, or however long that money lasts. So yeah, I wouldn't say that the pickings are slimmer than before. I think if anything, there's more opportunities because there's more access to capital, and therefore a higher likelihood that these companies are able to advance and progress through the development stages of a mining company.
Mm-hmm. And how do you see this sort of, Nicholas, as sort of the non-mining perspective on these things?
Yeah, I think, we're blessed with a lot of great ideas out there nowadays. So I think, finding good ideas isn't the problem. It's choosing which ones to allocate your cash to, or in our sense, our time to. So, I think, every day I go on X, I'm finding new stocks that I want to invest in or I want to work with through Atrium. So I don't think that's really the problem here. It's just choosing which ones we think are the best out of all the good ideas out there. So yeah, turning over lots of rocks is what we're doing right now.
Yeah, of course. And as we're sort of, going towards the end of our interview, are there perhaps any last things you want to mention, or any companies you want to highlight from your side? So just on that.
Yeah, I mean, I think the main thing with us is it's a great resource to get new ideas. So we're working on a bunch of initiation reports right now that'll be out over the coming weeks. Some really good, interesting ones that I think people will like. So, subscribe to our email list at atriumresearch.ca. You get a consistent flow of research and new ideas, earnings reports, on different research notes on press releases, and so on. So if you're just looking for, as I said, to turn over more rocks, we're a great resource to do that because that research flow is constantly coming in.
Yeah, and maybe I'll add to that as well. For the investors that maybe aren't as sophisticated, reading our initiation reports can be a great way to learn about the company in particular, of course, but also how we value these companies, how different businesses in different types of industries, mining, diversified, consumer, whatever, are valued, the different valuation methodologies, how we talk about them, what we believe is or are important criteria from an investment perspective. And on the mining side, I'm not sure, how many of your followers are interested in mining or invest in this space, but we do put out a monthly mining research note, which just sort of at a high level keeps investors up to date on what happened in the previous month. So you can find that on our website as well. We have put out a couple thematic pieces on unique metals, but also silver recently. So you can check that stuff out as well. And again, what we're trying to do essentially is make equity research available to the common man, as well as the institutional investor. But the people that typically wouldn't have access to it because they don't have a Bloomberg terminal or they don't bank with Canaccord or whoever, anyone and everyone has access to our research. And if there are any, public companies, CEOs, management teams that are watching this video as well, please reach out. More than happy to have a chat and hear your story as well. But appreciate the time, Lucas.
I also just wanted to highlight perhaps one last things you guys said is sort of the when you're reading the report. I mean, just for those that are less experienced, right? You can at least get an idea of what things to look out for from a fundamental basis. So I would say that this is a great resource and easy to access. So really appreciate the interview, guys, and appreciate all the work that you're doing. So keep it up, guys, and appreciate the opportunity.
Of course. Thanks a lot, Lucas.
Thanks, Lucas. Appreciate you.